Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin / cryptocurrency market update for September the 16th, 2021. Before I jump into the content for this video, please do me a huge favor and hit the thumbs up button. Also, make sure to subscribe to the channel and make sure you check the description. There's a link down there where you can join Patreon for just $7 a month. That gives you access to more frequent updates and also more frequent trade tutorials. So what I'm going to do today is I'm going to kind of maybe do some trading tutorials. I'm not sure yet, but I'm going to break away from those for just a moment, and I want to focus on some big picture stuff with Bitcoin and where Bitcoin may be heading. Okay, and as always, I will remind you that I don't have a crystal ball. I don't know anything 100% for sure. I'm just going to show some TA, technical analysis stuff that points to specific directions. So this is a monthly Bitcoin chart. I'm actually going to jump off of this chart for just a second, and I'm going to go over to the NDX, which is the NASDAQ 100. And for those of you that don't know, and I'm pretty sure that 99% of people who are subscribed to this channel will already know this, but for those of you that don't know, the NASDAQ and Bitcoin move together. They are very, very freaky mirror images of each other, with the difference being that you look at a monthly chart for the NASDAQ and a weekly chart of Bitcoin. And I don't mean in the way that, hey, you can predict what the other's going to do exactly day to day. I mean in a general sense of the word, right? Or a general sense of whatever. So this is the .com bubble. It popped, it crashed. This is the 2017 bubble in Bitcoin. It popped, it crashed. And the .com bubble, it retested this 200 monthly, and the Bitcoin bubble, it retested the 200 weekly, had the relief rally, right, after the bear market, just like we did in the summer of 2019 in Bitcoin. Then it came back down, actually fell slightly under the 200 monthly moving average, consolidated a bit, and then went absolutely bonkers, right? Just bonkers. Well, we retested the 200 weekly in Bitcoin, fell under it, then popped right back above it and went bonkers. This is, by the way, one of the reasons that I was looking for sideways consolidation in 2020, was because I was looking for a repeat of this. And then, of course, the federal government came out and started throwing money at everybody, and it kind of created a V-bottom recovery instead. But you can see how similar these two charts are, with the exception of what's happening in Bitcoin at the end here. It has not held its value, whereas the NASDAQ has continued to go up. It's kind of odd when you consider the fact that people are still screaming about Bitcoin being a store of value when the NASDAQ, is moving up and Bitcoin's moving down. But that's neither here or there. What I want to talk about here is the fact that all of these markets tend to do the same thing over and over again. When they have these bubbles, when they have these pops, we have that market psychology chart that goes around Google that I've referred to many times in the past, where you get the move up, you get the euphoria, you get the you get the drop, then you get the dead cat bounce into complacency, and then the drop. What I've talked about a few times, but I want to reiterate in this video, is that dead cat bounce is not like a random area on the chart. It's normally back to the golden pocket. So for example, on the NASDAQ and the .com bubble, it came down, and where did it come to? It came right to the 61.8 and then absolutely collapsed. Look at Bitcoin and the 2017 bubble. Where did it come to? It started to fall. Fell from around 20K to 10K, bounced back up. Where did it stop? Right at the golden pocket. See it? Same exact zone on both charts. Now it gets freakier. I showed you the similarities with the moving average, the 200 moving average. Watch this. How far did the .com bubble fall? It fell 83.49%. How far did the Bitcoin bubble in 2017 fall? It fell 84.27%. Even the drops were almost identical in terms of percentage points. It's really, really freaky stuff, right? These markets just repeat themselves over and over and over again. I'm going to actually keep both charts up. All right, so on the right-hand side, there's the golden pocket for 2017. Then in the summer of 2019, I had drawn a box between the golden pocket for the entire move, and I had jokingly referred to it as the hodler soul crushing zone, and that's because it was between the 61.8 and the 78.6, and it looked like this, right? And I had said, I think after we tap this, I think we'll go back to around 42 to 4,300 bucks. In reality, that's exactly what happened, other than it went a little bit lower to 38.58, right? Same thing, golden pocket got hit, and then the drop. If you look at this move right now, right, initially back in May, I felt like this was going to be a move down, a move back up to around 50K, 45 to 49K, somewhere in that ballpark. It wasn't like a specific target. At first it was like 50 to 55K, and then I changed it. No, I think it's 45 to 49K, essentially somewhere in that ballpark, okay? But if we draw Fibonacci levels, look what you have. There is your quote-unquote hodler soul-crushing zone, or your more aptly named golden pocket. So I'm not so sure, guys, that this is not complacency. I'm still thinking it probably is. We had this big bearish engulfing candle last week, okay, on Bitcoin, and this week we did start to move up, but we really failed right at the bottom of this resistance here, and it started to move back down. So if this thing can't find legs, it's looking more and more likely that this probably was the pop, right? So we'll see. I mean, I'm not going to sell all of my crypto because, long-term investments are long-term investments, and I think that a lot of the stuff that I have will hopefully be worth more in, 5 or 10 years, and I don't want to get caught off sides where I have no crypto. Just like long-term investors in the stock market very rarely sell everything. But I definitely am going to be exercising caution when it comes to this market, and I'm keenly aware that this may be, our complacency bounce, and if it does start to reveal itself as a bear market, then I want to make sure and be prepared for that so that I can play it that way. So I'm going to go ahead and draw some fibs on this chart here, on this NASDAQ, because whether you notice it or not, there have been some pretty nasty developments on this thing, right? It's struggling a bit here. So we'll see. I'm not calling tops or anything. I'm just saying, like, if this were to correct 84%, I'm not even going to mess with fibs. I'm just going to say it corrected 84%, which is actually, what was it, 83.5, something like that. If we had a repeat of the dot-com bubble, which is about 83.5%, this would bring the NASDAQ way back down to this area here, okay? That's a really, really major drop. Let's throw some fibs in there and just, for shits and giggles, where is that? Oh, wow, yeah, it's like, that's a really deep cut. Let's throw some volume on there. I don't think we're going to be able to throw volume because there's not any. We'll have to put on the QQQ for this. So the QQQ is, roughly the same thing as the NASDAQ. It's the ETF for it. And we can see that the major volume support on this is actually way down here. So again, if we measure this from the top, down 83.5%, it would take us down to this ledge here, and that's similar to the dot-com pop, right? Well, think about this for a second. Bitcoin, during normal bear markets, Bitcoin retraces about 83%, right? 84% in that ballpark. It's always existed in a parabolic uptrend. This is 2009 on the NASDAQ. It's basically just went up, up, up the entire time that Bitcoin has existed. So nobody knows how Bitcoin would act if the NASDAQ did have this type of crash. And I'm not saying it's going to have that type of crash. I have no earthly idea, right? The stock market is much more difficult to predict than what Bitcoin is, because you have the government involved, and the government has deep pockets, and they're not above manipulating markets, which is, been proven over the last 18 months. But if we do have some type of severe bubble pop in the stock markets, I do think it's very, very dangerous to automatically assume that Bitcoin is going to do what it's always done, right? Which is go down 70, 80% and then go up and make, $500,000 highs next time around or whatever. So just something to be aware of. If we put the volume profile on Bitcoin, and we go all the way back as far as Coinbase goes, our first major ledge is going to be up here around 11K or so. And that drop makes sense. If this were to repeat its past cycles, and if this was the top, yada, 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 that's about 83%, right? That's a normal bear market in Bitcoin. It's going to be about 80 to 85%. The last one was about 84%. So there you have it, right? Right down to that 83%, right down to that ledge. That all makes me lean toward this idea that this probably is complacency, all right? Because of how magically all that lines up. Now, obviously, it's got an easy invalidation. If this starts to go back up and takes out, then we don't even have to wait for this high back here. If this starts to go back up and takes out this high, last week's high, which is up around 50, call it 53K, that would make me think this probably is not complacency, and it's probably going to go ahead and make its way through this range and probably end up, having a whole nother leg before it actually tops out. In the third quarter of 2017, this was around August here, we did see a pretty bad sell-off. I don't remember exactly how much. It sold off 40%, right? So that sell-off came back down to the 19-week moving average, which is not on this chart. Let's just let's go with one chart here so it's easier to see. So I just laid out a lot of bearish statements, and that's why I want to counter those and show you that not all hope is lost just yet. So I'm going to put the 19-week moving average. I like to use orange, right? So back here in September, it did have that really bad crash, 40%, retested that moving average, and then went up, okay? That is different from what we saw this year because we actually lost the 19-week. So do keep that in mind that this pullback is different from that, but markets aren't exactly the same, right? As long as we're above the 19-week moving average, there's still hope for this thing. It's not good that this 19-week moving average is curling down like this because that really shouldn't happen in a bull market. See this? This is the bull market that started in 2015. You're not going to see this curl down. You're just going to see this steadily, moving up until it goes completely parabolic. When it started curling down, it was actually in March of 2018, okay? Same thing in 2019, it curled up. When it started curling down, this was like your last chance to get out. It was up around 10K, October 2019, and then it collapsed, over 60% from there. So it could be that, this is just the last chance to get out of Bitcoin before it moves down. So I'm saying I'm trying to lay out a bullish case. I'm not doing a very good job. I apologize. I'm just saying right now, this last weekly candle being so bearish, being a bearish engulfing candle, and then this week's candle being so weak like this, it definitely makes me think that that was the top back there, right? We came down here. We didn't quite make it to the golden pocket here. So it could be, and endless possibilities. But it could be that this just ends up coming back down here, maybe consolidates a bit, and maybe it has a blow off top. I don't think that's going to happen, but it's always possible. Okay. Over the next couple of days, I want to see where this week closes at, and then that'll give me a lot of information as to whether this is just a fake out and it's going to continue up, or whether this really is what it looks like. There's not a ton of volume right now, not on the bear side or the bull side. So, like I said, not all hope is lost. And I don't want to make it seem like I'm just like, oh, it's done, it's cooked, it's over. But, you look at this, you've got more selling volume here, this heavy sell volume, right? You're really not seeing the buyer step up. Compare that to something like March of 2020, right? We had this huge sell volume in March of 2020, but the very next candle, look at this buy volume. That was the largest buy volume candle in the history of Coinbase for Bitcoin ever, right? We had another one right here, which was kind of odd. It's an odd place to have it, right? Usually these are either at the beginning of a move or at the end of a move, and this was neither. But we're not seeing any of that, excited buying now. We saw heavy selling, and we saw some buying, right? Decent buying even, but not heavy buying. So this is, by the way, if you're wondering, this is a 12-day chart. It's just a chart I use. I started using it originally in the stock market, and then I just started using it more in Bitcoin because Bitcoin is acting more like stocks the last few years than it normally has. And I think it's got to do with the fact that there's so many new people in the space, right? You had like Robinhood, started allowing people to trade crypto, and you had PayPal, started allowing people to buy crypto, and they're not allowing them to buy a lot of the altcoins yet. They're mainly allowing them to buy stuff like Bitcoin. So Bitcoin looks more like a stock to last year than what it normally did. You go back in time and it's like, oh, what I wouldn't give for a time machine where I could just, set a bot to buy every time it touched the 19-week moving average and sell if it broke below it. Well, you make millions and millions of dollars with that strategy, right? But if you try to do that in this time around, it never touched it. It broke through it and then just went, right? And that's more like stocks. But if you go look at the altcoins, a lot of the altcoins look exactly now the way they did, in every market cycle previous. So for example, look at Ethereum, right? What did Ethereum do when it pulled back? Where did Ethereum pull back to? Well, watch. Perfect kiss of the 61.8. Perfect kiss of the 61.8. Perfect kiss of the 61.8. So this was actually a buy zone all through there. And that's what Bitcoin usually did in its previous bull markets. And that's why last year I kept waiting for that retracement that never actually came, right? And I really think it has to do with the fact that all those new people entered the space, and so it just never corrected. There was more demand than there had been in previous markets. But then you take a look at something like Ethereum, it doesn't have quite the same level of demand as Bitcoin, which is ironic because it was a much better investment last year. But, there you go. It's a perfect kisses. Or if you look at something like Litecoin, where did Litecoin come down to on that dump? So it came down to its golden pocket, actually peekabooed out of it down here, right? It came back to its golden pocket and then bounced off of it. And I remember this actually did have the retracement in 2020, and it threw me off because I was like, what's going on here? Because I couldn't take the trade on the Litecoin, or I could and I should have, but I didn't want to take the Litecoin trade because Bitcoin had not corrected back to its 61.8, and I was worried Bitcoin would run the party. But look at this, $25 low in March of 2020. It had a $69 high in August of 2020, and then it had a perfect retracement to the 61.8. Right, that's what I'm saying. These alts, they did act the way they've always acted. And I just truly believe it's because they don't have the same level of demand, from PayPal and I think Robinhood does let people trade Litecoin. It's just people aren't as interested in it, right? But perfect touch, and then that move up. It's pretty interesting, I could do this on chart after chart. Like OMG is a good one. So here's OMG, right? Here's the top back here in 2018. The drop came up. There's the golden pocket right there. It's hilarious because I remember being in a big Facebook group, like 100,000 people in there, and these guys touting themselves as experts at trading. And I specifically remember them being bullish on OMG in April of 2018. And the reason I remember is because I was a dumbass and I actually had some OMG that I had planned on selling at this level, and literally minutes before the order filled, I canceled the sell. And thanks to that, I actually ended up losing like 3 or 4 Bitcoin when OMG crashed because I had bought it with Bitcoin. Sucked, right? But that's what happens when you listen to people who, are bozos and don't actually trade, just say they do. While they were screaming, we're bulls, it was actually touching a literal institutional short zone, and then it dumped, right? So then you draw it over from this swing high to this low in March of 2020. And where did that wick send it? And this crazy wick back in May when it got to over $15 again, where was that wick sitting? Right there in the quote unquote hodler soul crushing zone, right? Right inside that institutional short area. And what happened with OMG? It fell 81% over the next couple of weeks. Look at EOS. Right? And again, you're not going to be able to buy OMG on PayPal or OMG on Robinhood, at least not yet. If we get EOS up here, this was the top back in April 2018, was up around $24 when they launched their mainnet. fell down, right? Put in this low right here in March of 2020, and then it had this crazy pump from around, $2 or $1.50 all the way up to almost $15 in May of 2021. And where did that come to? There's the hodler soul crushing zone. This one just barely missed it. I mean, just a few cents, right? $15 was the level. It hit $14.94, and then it absolutely shit the bed. Fell 79%. My point being, and this is getting a lot longer than what I meant for it to be, my point being is these things are not accidents. These markets move in these very predictable patterns. Sure, nothing's 100%. If it was, there'd be trillionaires out there, right? If it was as easy as just selling the 61.8, somebody would write a simple bot and that's all it would do, and they'd be worth, trillions and trillions of dollars. You've got to take into consideration everything else happening, and you've got to take into consideration, the price action itself and, all that stuff. And I'm not saying that you don't. I'm not saying that just because it hit the 61.8 that it's, I got to sell everything I own. But I am saying that when I look at the picture and all the information that's available to me right now, I would lean, I was pretty neutral. I was bearish back here. I was bullish through here. I got neutral around here, and I've been neutral the last few weeks. I did a video last week or the week before and said, look, I'm neutral. I'm not shorting this, right? I'm not longing it. I'm not shorting it. Well, now, if I had to give odds, I'd say I'm probably about 80-20, with 80% being bear and only 20% being bull. Again, that could change. If this weekly candle suddenly takes out this high, or if next week we see a move up, take out this high, then I would say it's probably not complacency. But if they can't take out this $53,000 level, I think that we're heading down. And again, you want to line this stuff up with price action, not just fibs. So let's take the fibs away. We know it's a golden pocket, but it was also resistance right there, right? So this is not just the fibs. It was also resistance right here, right? Because this was support, bounced off of it, support, bounced off of it. When you fall below support, it flips to resistance, right? So we're coming up into that zone of resistance that's confluence with the golden pocket there, and it was not able to break through. So that's why I think that this is probably heading down. And to give you an idea, you could draw trend extensions. Like this was one I had drawn up several months back before the top came in. It's one of the reasons I was so bearish up in this area, because I first thought this was the top, and then when it took this level out, I thought, okay, it's probably going to go up to 67K because that's where the trend extensions were pointing to. And so when it started looking like wick off up here, that's why I was like, okay, 59K, it's time to look for shorts, right after it came back down like this. But if we take a look at this, very, very accurate, right? Predicted almost to the T where price stopped at. Well, if this is a downtrend, we can do the exact same thing. We can take this, connect it to this, connect it to the pullback, and it gives us a target of $16,845. And I do think that target makes a lot of sense. Look at this. That is was the highest close ever before this bull market, right? Highest close on Coinbase was 16,749. So that target makes perfect sense to me. How far is that down? From the top, roughly 74%. Do I think it goes lower than that if this is a bear market? I do. I do think it goes lower than that. With that being said, I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. Make sure you give this video a thumbs up, make sure you subscribe to the channel, and make sure you check the description for a link where you can join Patreon for just $7 a month. This is James with Crypto Common Sense, reminding you to please trade safe.